So if you're self-employed and thinking about buying your first home in Alberta this year, this video is for you. Being your own boss comes with a lot of freedom and flexibility, but when it comes to real estate and qualifying for a mortgage, it can add another layer of complexity. Income verification, debt ratios, down payment requirements, it can all feel like a bit of a maze. So today, I'm going to walk you through everything that you'll need to know so that you can confidently apply for a mortgage in 2025. So what do lenders actually want from you when you're self-employed? First, they'll want 2 years of business history, or at least in the same industry, to establish income stability. This is a standard expectation from banks, mortgage insurers, and credit unions alike. So to verify your income, you'll need your T1 general and notices of assessments for the past 2 years. Now, depending on your business structure, things like GST returns, articles of incorporation, or your business license might be required as well. And if you've been in business for less than 2 years, CMHC might ask for some extras. They may ask to see cash reserves, proof of training, signed contracts, that kind of thing. Another tricky part is net income. Self-employed income is often lowered by deductions, but lenders look at your net income on your tax return, not your gross. That means that if your business brings in $250,000 a year, but you only pay yourself $25,000, lenders can only look at that $25,000. A solid credit history, minimal debt, and clean records will also help, and lenders will weight this quite heavily when reviewing your mortgage application. One thing to remember is that these institutions only get paid by lending you money, so they do want to get you the mortgage that you want. So with this in mind, a good mortgage broker can usually find creative ways of proving your income to these institutions, so that's always the place you're going to want to start. If you're putting down less than 20%, you'll need mortgage default insurance, and the CMHC has a specialized program for self-employed borrowers. With the CMHC's self-employed mortgage loan insurance, you can put down as little as 5% on the first $500,000 and 10% on the rest at up to 95% loan to value. For homes costing under $1 million, they cap the amortization period at 25 years and require a credit score around 600. So to verify your income, the CMHC will accept notices of assessment along with your T1 or any GST returns or financial statements from your business accounts. Now, if you've been self-employed for less than 24 months, the CMHC may still consider it if you've bought an established business, hold sufficient cash reserves, have steady cash flow, or you have a strong track record in your industry. So what if you think you're not going to be able to qualify with any of the big banks? Don't stress, it's not over yet. Not all lenders follow CMHC's strict documentation requirements. Some B lenders, like Sagan or Canada Guarantee, offer low documentation or stated income programs. So these can let you bypass some of the traditional income proofs that are typically required. However, you should expect to put at least 10% down and pay higher insurance premiums depending on the loan to value. There are also true private lender options available, sometimes using creative proof of income such as invoices or future contracts. Now, these alternative options can work out well, but the interest rates will be higher and the terms will be tighter. Usually, going through a seasoned mortgage broker will help you find the best fit and save you money in the long run. Here are some practical tips to strengthen your position before you start the application process. First, if you're incorporated, consider paying yourself a higher salary from your corporation. Yes, it is taxable. However, this will boost your qualifying income. Next, and perhaps most importantly, you'll want to maintain records so that you can prove consistent income for at least the last 2 years. And with regard to credit, you'll want to maintain a good credit score. Somewhere above 680 would be ideal. Another good idea is to maintain an emergency fund within your business so that you can prove that you have good cash reserves. Now, if you're new to self-employment, it can be a little bit more difficult, but having a history of contracts that you can show or a strong business plan can help bridge the qualification gap. So that's the full picture for self-employed home buyers in Alberta in 2025. Now, hopefully you know what lenders want, how CMHC programs work, alternative options, and how to prep yourself effectively. So if you're self-employed and thinking about buying a home in the next few years, understanding this information is key to saving you time and money in the long run. I truly hope you found this video informative and helpful, and if you did, please do hit like and subscribe, as it makes a big difference to a new channel like mine. And also, please feel free to drop any questions you might have in the comment section below. Thanks for watching, and I'll see you in the next one.